All right, everybody, welcome to CyberBulls. It's a very, very special episode. We have lots to talk about. We're going to talk about the different kinds of business models. We're going to share information today about whether or not Tesla can actually license not just their FSD and autonomy, not just supercharger, but more to these legacy automakers. We're going to talk about business models like the robo-taxi model. In our show today, we have a special guest, Larry Goldberg. He's here with us. So Larry is actually a serial entrepreneur. He's an angel investor. He's written a book called The Decision Model, and he's co-founded a company called Sapiens Decision. Lots of decisions here, Larry. Thank you so much for joining us today, and wanted to just welcome you. And we've got Alexandra Mertz. Everybody knows her as Tesla Boomer Mama. We've got Jeff Lutz. He's a supply chain executive. And we have Xander Sky with us as well. And he's an expert in options trading, but also somebody who's been all in to Tesla. So Larry, why don't we start with you? Share with us, what kind of bull are you? I think you are a long-term bull. I'm not sure if you're an all-in bull, but tell us a little bit about your philosophy about Tesla.
But by definition, Herbert, I'm not all in on any particular investment or stock. Tesla was an early buy of mine, and my philosophy is generally not to put a large percentage of my net worth into risk-based assets, high-risk assets. I tend to invest not more than about 10% of my net worth into risk assets because I'm in business, because I've generally been in business for myself. That's pretty high risk. I want to control that risk. But what happened is that my Tesla investment just grew and grew and grew and grew, much like my Amazon investment of the late 1999s. So what happened is that Tesla just grew and grew and grew, and now today is it's much larger than I would normally hold. But so I would not say I'm all in on Tesla, but I would say it's by far the biggest single holding of my equity portfolio, and it's one of my biggest single investments of my entire net worth.
Okay, and then what kind of bull are you? So you believe in Tesla. You spend a lot of your time. You're retired, but you're spending so much time at Tesla. You joined us on these calls. Why are you so bullish on Tesla?
I am what you may call a long-term bull. I see a huge future for Tesla. Somebody called it an unbounded future. Well, it has to be bounded. It's unclear what the boundaries are yet. So I buy the value of robotaxi, I buy the value of Cybertruck, I buy the value of the semi, I buy the value of the robot, I buy the value of the energy business. All of those businesses I take very, very seriously. And one business that I identified quite early in terms of value is the charging network. I regard that as a very high value opportunity as well. So I see, all these opportunities for Tesla. So, but I just don't see, the next 2 or 3 or even 4 years realizing all those businesses. I think each is going to have its own rate of evolution. I think the auto business is extremely difficult, competitive. It is very, very volatile and very susceptible to economic forces. So, I am really looking 4 to 10 years down the road, but I see an enormous future for the company. And, so I'm a long-term bull.
Larry, do you still consider it high risk? You said high risk multiple times on the lead up. Do you still view it that way?
Yeah. I think Tesla, is a very, very high opportunity, very high value opportunity, but the risks are very significant. Look, anything in the auto business is risky. Elon himself is a risky guy. He's not risk averse by any manner of means. I've invested, by the way, in SpaceX. I've invested in X.com. I'm very excited about those investments, but my investments there are very, very small. As a percentage of my assets. So Tesla, on the other hand, is a very large percentage of my assets, but it grew that size. My actual initial investment was no bigger than my investment in SpaceX.
But when you say it's very risky, do you think it has a risk of default still,
No.
or do you just think it's a very volatile stock?
No, it has a risk of value.
Yeah.
Tesla's not going to default. Tesla's got a great future, but whether its shares are worth $50 or $5,000 is an open question. And when they will be worth those values, I don't know. Tesla is very sensitive to economic circumstances, as we're going to learn in China. I don't look at Tesla's stock price on a daily basis. Well, I do now because I'm forced to, because some people ask me about it, and I have to know what it was, but I'm not interested in what it was.
Okay.
No, I hear you.
Let's go ahead, and I want to dive deep into some of your research, because I've had you on my show a couple of times. You've done incredible analysis for licensing, robotaxi business model, and others. But let's talk stocks. So let's go around the table here and just kind of understand from each of you first, what is happening to Tesla stock right in the last 3 months, specifically right after the earnings call last month. And then there is, want to hear your price target. We're going to talk about your licensing business model. With you take it to the far end there, Larry. You've got this incredible philosophy and forecast for what's going to happen there, and robotaxi. So let's go around the room here. So why don't we start with you, Alexandra? Tell us what you're thinking about what happened to this Tesla stock and why did it drop in the last month?
Yeah, I mean, I had a lot of back and forth with Gary these last few days. He is convinced that these price cuts again and Elon having a more erratic behavior again, or what Gary thinks is a more behavior, all had an influence. And it could be. I mean, who knows what drives a stock price? It's the one thing I learned about Wall Street is they always move in herds, right? When this feeling of Twitter overhang came, or this feeling of now this erratic behavior, or not any good news on Tesla, they all seem to exaggerate the same crap over and over and over again. I don't see any fundamental reason for which we're here. I've explained over and over again that I think the model Tesla is putting in place is to always have the cheapest possible cars in each category, because they're gonna be the vector for so much more income, and so I'm not surprised about these price cuts. Nobody should be, because in the earnings call in the third week of July, Elon and the team clearly stated that they could not exclude them, that it would depend on the rate scenario, and rates went up and prices went down. I mean, this was didn't have to have a crystal ball to understand what's happening. So I can recognize, I don't understand it and I don't vouch for it, but I can recognize that what's happening is, if all analysts utilize the same Excel models to project 3, 5, 7, 10 years price targets to discount them back, well, obviously, if you suddenly lower the average selling price and are unknown about cost of goods sold and just leave them unchanged on where they are, then obviously your Excel result will be less earnings per share. That's just a mathematical consequence of it. The question I have is, are cost of goods sold really stable where I think they're coming down? And again, it doesn't matter to me. So for long-term investors, this should be, in my view, a brilliant buying opportunity. I didn't even hope we would see these prices again once we had moved up from the 100s close to the 300s again. So I'm very happy to have these, because my August money that I will be putting it will be at lower levels. But obviously, it's painful, and I can only say it again and again as a retail investor. don't invest in Tesla if you're doing it for 3-6 months. It's not a stock for that. And the current uncertainty of the environment, of the economic environment in the USA, in China, and in Europe don't help you at the moment. You have to have a longer horizon.
Thank you. And then you, Alexander?
I mean, I think it's been covered thoroughly. Price cuts are impacting it. You know, if your modeling and your earnings per share is dropping, then there's stock pressure. I think the herd comment from Alexander was really good. I think that, you know, once it hit 300, a lot of momentum came out, you know, that was going into earnings and then right after. So, but I'm kind of in the same boat. I am a long-term investor, so I haven't been messing around with leaps as much. I bought a few, just kind of shorter term, like March, but that's more lottery ticket. And I'm looking at, like, I'm buying shares. I think at 210 is where I think the 200-day moving average is going to come up a little bit. And I'm hoping that there's a turnaround. But, you know, it's gotten to the point where I've started just viewing the long term as the play, right? I'm not looking at these shorter term moves, because, like Elon said, there's going to be pressure for the next year or so. And on a good personal note, I had calls that were sold back around the Ford announcement, you know, joining the Supercharger network. And finally now I can breathe, because they're all expiring worthless this Friday. So, and they were kicked down from May all the way to August 18th at 250. So that's good. I got out of that options, you know, selling calls. But the question, like, I wonder is, does anyone think that there will be a pop at all, or is this just this pricing pressure going to continue to drive us down? We don't have to cover that right now, but I'd love to know that, what you guys think.
What do you think, Jeff?
Yeah, I'll get to Xander's question in a minute. Just go through some numbers. So why is the stock down? So first off, the QQQ index, which has a lot of the tech stocks mapped to it, it's down in the last month. It's down about 6.25%. Nvidia's down about 6.25%. Apple's down about 10%. Tesla's down 25%. And you look at the event, you look at it starts at the earnings call. That's the event. The stock peaked up at around $300 going into that, and since then it's down that amount, about 25%. So let's go through what's happened since then. Well, first off, we talked a little bit about it on our one-on-one, Herbert. I viewed that earnings call as a set of missed opportunities. First off, they could have been a little bit definitive in terms of explaining the fact that they've really, on the COGS side, they found equilibrium in Q2, meaning that their COGS efforts, the ability for them to take cost out of product versus how much MSRP or how much pricing they took out of the configurator came into equilibrium. That happened in that quarter. I sent the tweet out, and Elon liked it. That happened. Did they spell that out on the call? No. There was a couple of throwaway lines about their efforts in gross margin improvements, but I call that a missed opportunity. Tesla's a powerhouse on COGS management, and I can get into more of that later if we decide to go into it. So one, I view that as a missed opportunity. Two, the energy side, also a missed opportunity. I think they could have gone through, we're in the second half of the year, and they should be going through more of the pipeline and the future of how they see that ramping up. The gross margins there improved dramatically, near 70% improvement, approach basically at where the auto margins are now. And where's the ceiling on that? It's certainly not where they promised before, because that factory in Lathrop's only a third full. Finally, big thing, a named executive, the CFO of the company, abruptly left about 10 days. It's only 10 days ago. And when this happened before, when Deepak, the prior CFO, left, the stock went down 4%. You know, it was traded around, flattened around, and whatever. And then that was 2019. The stock took off. So we're in a 1 month period. It's down a lot. It's down a lot. People shouldn't think like, oh, the market's down. Oh, macro. The markets are down. There's a 5% pullback in the S&P. The Qs are down 6.25. Tesla's down 25%. I think it's those three areas. And getting, when I say there's a missed opportunity on COGS, I'm answering the whole price conversation, which we can talk more about. I don't view the pricing announcements this quarter as meaningful. I went through the math on a per car basis. Gary went through it on a earnings per share basis. I don't view it as meaningful. What is meaningful is Tesla really isn't discussing the fact that they're going for COGS reductions that are way in advance of a couple $100 per car. And so I think that's why we are where we are. There's this, the whole thing's been painted with pricing reductions when it's on a very small, minuscule set. Nobody knows where the bottom is. And that's probably where some of the concern is.
Okay. So, Larry, I want to ask you the same question, but I think I don't want to jump the gun here, my assumptions about you, but you would not really care so much about what's happening in the last 3 months. What I learned about you, and tell me again if I'm characterizing you correctly, which I love, by the way, is you're actually very conservative when it comes to the short term. You're actually thinking that the adoption of EV adoption will take longer than most of us think in the next couple of years. But on the flip side, your future of what your forecast is crazy optimistic. It's like more optimistic than most people. And you make these you have these business models that you've shared with me and you've shared with some of us. And it's like the greatest, so tell me if that's correct. Is that how I characterize you correctly?
I call it a cliff. You only have to look at Norway to see the cliff. What happens is that it goes along with the EVs growing in market share. And then there's this critical mass situation where, ICE just dies. And so we'll see this, measured growth in EV adoption in Europe and North America, and then ultimately in the whole Asian subcontinent. And then all of a sudden, boom, they'll stop buying ICE cars and they'll be left with this disaster. So I see a measured growth. I think that it's going to be a struggle. When I say a struggle, I mean I wouldn't say Tesla's had they've had a struggle. I mean it's been fighting in the trenches all the way along. I think there's another factor in terms of the current price of the stock, and I think that people watch volumes very carefully these days. They they subscribe to Troy and they watch the volume counts very carefully. Troy is always very conservative in the front end, and so people are kind of hedging their bets about the actual count for the end of the quarter, and so that's affecting the exuberance around the stock. So I just put that last thought into your head. I don't know to what extent it counts, but in general, you're right. I mean, I am a strong bull EV adoption. I see Tesla taking the lead for a whole host of reasons, and I think that it's going to be a flood, but the flood's going to happen very suddenly.
All right. Next topic is price targets, if we even want to get here. So do you have a price target, Larry? And should we even talk about this? And I don't know, should we say the end of this year, say 3 years from now and 5 years from now?
I think 2026 is a good target period to think about serious pricing resolution. I have a 3 to 5 year window where I think robotaxis, where I think FSD is going to mature. And I think that will be very, very material to price discovery. I think actually the bot may be very material to price discovery, and the growth of the sub $25,000 car, and maybe even the sub $20,000 car, is going to be very material. So all of those things, I think by 2026, I'm not saying they will all come to market. I'm not saying, but I think that we will have discovery around their potential and their opportunity and the margins and so on. So I'm looking at a 2026 price target, and my number is substantially higher than today. So I'm very anxious for leaps. We're going to see in September, we're going to see the March 2026 leaps. I'm going to be a buyer of those. I'm going to be a very strong buyer of those. I think Tesla move in these 3 to 5 year cycles, and I'm very bullish, very, very bullish on that timescale.
Okay. Love it. And so then, Alexandra, you just came out and you shared your 3 year, 5 year, 10 year. What's your 2026 price target?
Oh, that's a good thing. I don't remember. I remember I was at 3,500 for 10 years, but let me check. I have to pull it up off my, so not to give you a wrong one. Phil, with somebody else, I'm searching my spreadsheet and then I get back to you.
All right, Xander, you're next. Do you do price targets, Xander?
No, I don't have an actual price target. I think it's going to go up. It's good to hear that. That's a question that I had. It was, are people still buying leaps? December of 25 is available, so that's what I alluded to. I picked up some of those, but I guess I've been really burnt by leap buying going in. So I don't have a specific one. I did have a question back to Jeff regarding Kirkhorn. Do you think that, and this can be for Larry and everyone, do you think Kirkhorn pressure comes from the potential of selling his shares? Is that a reason why Wall Street would have kind of get out, and that's the actual reason, not the pricing pressure?
No, I think it's more of CFO of the company leaving, or whatever circumstances, departing the company abruptly. And so what does that mean? And it could mean nothing. It could have been something personal. We're only speculating. Nobody's released any information. But in general, it's met with skepticism, in general, by markets are generally skeptical. So I think it's more of that. I think once we get through this Q3, we see the projections for Q4, we see the new CFO out there, I think things will settle. But in general, I think, it just happened and there's some concern.
Do you have a price target, Jeff?
Yeah, I haven't done multi-year. I've not done multi-year price targets. I'm a long-term buy and hold. I do some trading around the edges of my position, basically, but in general, held the bulk of my position since 2013 when I got in.
Oh, we're all very boring. Nobody's going to give a number. Go ahead, Alexander. Give us a number.
No, I don't give you a number. You remember I did my 10-year horizon out of, top down, where I considered that one part obviously is the 20 million cars either delivered or at least produced. One part is energy, but then double a part is the bots, and the other double a part is software as a service. So actually it comes in 6 parts, and only a sixth of it is car revenues. And that's the one where we had the closest hold of it, because we know current margins. We know that Elon considers 20% margins for the basic car income, the goal line on which they're working on. And on energy, we know that he clearly states that energy will catch up with the revenue numbers, the car sector. Then the two unknowns are how much will the bot bring in 10 years and how much will the software as a service bring. And I think there I will differ from Larry, because he's a little bit more pessimistic on the software as a service revenues than I am. I think that this licensing model, and I think we're getting to that in a moment, is actually going to bring much more to Tesla than Larry's theory. But I'm very much looking forward to debating that.
Yeah, well, let's get there. So, Larry, one of the things that you did that's pretty good was you did a very good deep dive analysis of Tesla licensing their software. You called it 0.5 supplier, a tier 0.5 tier supplier, which is like even better than a tier 1 supplier to these legacy automakers. And then you went way beyond just supercharger, just FSD. You're saying that it's inevitable that these legacy automakers, some or many of them, will actually license way more. When you want to share that with us again?
Yeah, not only license, but also buy actual components from Tesla and designs from Tesla for the whole car, as well as the software. I think that right now, OEMs are buying whole cars from Chinese manufacturers in China, because they just cannot manufacture an EV that is competitive to Chinese manufacturers. Well, they can't manufacture an EV that's competitive to Tesla here in this country. Now, I doubt, or in Europe, I doubt whether they're going to buy a whole car from Tesla. But, many, many years ago, Daimler-Benz at the time, now Mercedes-Benz, licensed a drivetrain from Tesla and bought stock in Tesla. If they'd kept it, it would be worth double what they're worth today. So it's not unheard of. So Tesla has just this massive lead, firstly in the software that drives the car as a whole, because the Tesla operating system for the cars is an integral, a single operating system that operates the entire car, not an operating system for the for the seat, and an operating system for the windscreen wiper, and an operating and so on and so forth. So there's a single component. There's a single brain that runs the whole car, and every component is a slave or a client to that particular host. So Tesla has a huge opportunity to license this capability or these designs and capability. And then, of course, when we get to the mechanical, I mean, their motors are peerless, their battery packs are peerless, their electrical control units are peerless. So they could manufacture those for other OEMs, or they could provide designs to those OEMs for those OEMs to build them themselves. And of course, they could help the OEMs design the car and the production methods to build those cars. All of that could be a business unit in and of itself for Tesla that could bring value to the other OEMs, but of course, a very, very significant income to Tesla. And I mean, Alexandra's right. They could license. They could supply as a service many different software services, not only the services that would be an API for the app, but also services such as training. I think training is many years off though, but certainly supply the ability to. I mean, full self-driving would be an obvious opportunity to license, and so on. So that's a whole business opportunity that could provide a tremendous income stream over time, but also support other OEMs to pursue this mission and to become profitable faster and to be able to get out of their ICE vehicle manufacturing. After all, if you increase the TAM of EVs, you're going to increase Tesla's revenue. Just their sale of EVs will go up because the total market that they're serving is going to increase.
Yeah, I completely agree with you on that point, Larry. I just have two questions. The first is, do you think Tesla will reserve that only to EVs? Meaning they will help these OEMs only to upgrade their electric vehicles and not any hybrids or other forms?
I do believe that for several reasons. The most important is that it's extremely difficult to engineer for hybrids or for ICE vehicles. It's extremely difficult. The complexities of engineering, and I think Jeff is better suited to is the better guy to advise on this. The supply chain is just so different. I mean, if you see the presentation I built, there's a whole set of technologies that are specific to EVs, and there's a whole set of mechanical, devices that are being built and engineered into the car for ICE vehicles. The two just don't mix very well.
Yeah, and don't you think, sorry, while I'm on that, you probably read about 10 days ago was this initiative of Toyota to increase their partnership with Pony, who is one of those Chinese mobility solutions. I try to stay neutral. And so I researched them, and all of those are either ICE cars or mainly hybrids. So they are trying to solve mobility, and I don't think Toyota is that stupid. So there's now a capital interaction between.
Are that stupid? Sorry to interrupt, but I honestly do believe they are stupid.
I tried being nice. Okay. Okay. So my second question is, but let me get my second question, please. My second question is, so I listened to the whole presentation. Absolutely loved it. I think this is imperative viewing for anybody who wants to think of himself as a long-term investor of Tesla. But then you gave something that broke my heart of a true capitalist I am, which is that Tesla should give it to these OEMs at a fraction of the price, that to let these OEMs still make a good margin on the whole FSD business model, whatever they're going to do with it. And I was like, why would you do that? Why would you be generous with them?
Point of order.
Okay.
I don't mean to interrupt you, Alexandra, but I think you've misquoted me. I didn't say a fraction of the price. I said a fair price.
But it was still too low for me.
I think Tesla will make a very substantial margin on the business, but I think the OEMs must make a fair margin, and there's enough margin in it for them to do so.
I know, but I think in your model, if I remember it right, it was like a quarter for Tesla and 3/4 for the OEM. No, was I wrong there? Okay, good.
I've got the recording.
That broke my heart. I was like, I'm not going to leave them 3/4, please.
I've got the recording.
The manufacturer has to buy has to pay for the part. So what they're buying from Tesla is design and engineering. That's generally a royalty or a percentage. Now, if Tesla manufactures it, then they'll make the same margin that another, maybe a higher margin than another supplier would get. I mean, look, it has to be a fair business for everybody. And believe me, it's going to pay Tesla to have GM and Ford really start selling, EVs that are really, really good for the public. Because then the transition to EVs are going to be even faster, and Tesla's going to grow faster. I mean, I don't think people don't get it. They think if the opposition sell EVs, they're going to lose. I mean, that's Gary's whole.
I know. He doesn't see the cake gets bigger, right? Yeah, I mean, on Tuesday, it drove me crazy because he's like, okay, so they're going to sell FSD for 15,000 or for 200. I said, nobody in the world is going to sell FSD for 15,000 or for $200 a month anymore. That's just now this transitory period. And we would really, I mean, he then called and excused himself and all good, but I can't understand why these guys don't get a little bit out of their current horizon. Everything seems to be stuck. This is the model for the next 5 to 10 years. Then we discount it back. Then it's $360. Then we're happy. No.
Okay. We need to bring Jeff in because he's Mr. Supply Chain. Okay. This guy is the executive level at the top companies like Motorola, Lenovo, and Google. People call him, by the way, our audience is calling you Mr. Incredible because you look like Mr. Incredible. You're Mr. Supply Chain. Please, Jeff, tell us what you think. Is Larry off? Would Tesla ever do this? Will they even have the capacity to do this? Would they become a tier 1 or Larry calls it a tier 0.5 supplier to these legacy automakers?
No, I think it's very possible. Remember the mission from Tesla. They want to advance, sustainable transport and sustainable energy. So if they can assist others, you can see that this is what's counterintuitive to most people that follow companies, follow equities. They think companies compete, and they do. But the way that the head of this company thinks is he wants to win. He wants to have the best product out there, but he also wants to help others along. He wants to help this transition to sustainable transport. So in terms of licensing, this is not uncommon. This happens in other industries when a particular company demonstrates superiority in an area. And it's not just IP, it's also know-how. And it's also kind of the machine behind it that is, that's building that know-how. And Tesla continues they have an innovation machine. There's more, they're innovating faster than they could ever go and even put IP protection on things. And that is the actual gold. It's not just what does a Tesla powertrain do today, or what does, their current hardware for computer today do. It's actually how they're structured. It's how much innovation, the rate of innovation that comes out of that company. And that's what others are going to have trouble catching up to. So when you have trouble catching up to, and you've got bills to pay, you got to figure out, do you have to go buy? It's called the make versus buy kind of scenario. Am I better at making this, or am I better at buying it? And what does it mean to my bottom line? So I think it's very plausible that Tesla could be licensing not only software. I think that's very possible. I think that's going to happen. It's a question of what's the structure. And in terms of hardware components, I also think, that's possible as well, because it's not only that they're developing motors and inverters that are superior, or they've developed a hardware for computer that has superior, processing performance, but it's actually the value per dollar that they're bringing back to the vehicle. When you plug that back, and if you plug their next generation motor back into the vehicle, and it's sub $1,000, and its performance is equivalent or better than anything else out there, that value per dollar component is what you would want to go license, because you can't do it better than Tesla.
Exactly.
Go ahead, Larry.
I just wanted to add one thing. I mean, think back to the days of the VCRs, right? Sony had by far the superior Betamax. Panasonic came out with, the VHS. Who won? VHS won. Why? Because Sony wanted to go on its own and own the market. Panasonic licensed everybody and his brother to build VHS. And what happened? VHS just took over. Now, here the beauty is Tesla has the best solution in almost every aspect of the vehicle. As Jeff said, not just the software, but in power management, in everything. I mean, it's incredible the research they've done. And so Ford could drastically diminish the pain and the time that they face. Chevy could, GM are going to be hurting so badly. This is a disaster. The shipwreck that's going to be GM this time next year, guys, it's terrible. If I were a trader, I would be selling GM shares and Ford shares short today.
From all sides. Yeah, and I think actually that Berkshire has cut their position in half. It's only beginning. I think they're going to liquidate it all the way through. And never forget that they are one of the biggest investors in Moody's, so they usually get information ahead of time. And GM is barely hanging on to that investment grade. Remember, S&P and Moody's, sorry to interrupt all this rating stuff again, but S&P and Moody's currently had this ESG component in their credit ratings. S&P just announced they're taking it off. That was the thing that helped GM to hang on to their investment grade. If GM loses the investment grade, has 80% of their shareholders are institutionals that will be very sensitive to the loss of at least one investment grade, but it could come from both sides, because both ratings for Moody's and for S&P, they're hanging there like on the cliff. So if both of them are downgraded, these 80% institutional investors have to have a real good look whether they want to continue stay in GM, and half of them will not. That's just how it works on the STEM. That stock is going to be really, really under pressure very soon.
Not to mention the strike potential. Well, the contract that's up and is in. I mean, it's in a really serious situation. That
unsustainable.
Contract, I think the government's going to have to step in.
Yeah. And I'm not sure this government, I mean, I have the feeling that the second level in the White House is actually very operational. Remember when we had that Long Beach discussion that everybody feared would become really escalating? And they threw a lot of money at it, sent the whole sub-Biden executives to Los Angeles and got it off the heater. So that was very good. That was astonishingly good, because I was obviously living very close to it. I was looking and watching that very closely. So they may as well do the same in Detroit, right? I mean, the one thing the Democrat Party is very well connected to the whole unions there. But it is a huge problem. And there's other stuff brewing. Their franchise dealers are the most unhappy franchise dealers there are at the moment. Then add to that resale value in the wholesale business of cars, because what we obviously often don't look at is there's a whole market of dealers that buy directly from the manufacturer. So these cars don't go to the GM dealers or the Ford dealers or the Volkswagen dealers or wherever, but there are wholesalers there that sell them to other countries, other retailers, other whatever. And that market is still historically high, but coming down quickly, because this whole COVID bubble of used cars is just exploding at the moment. So for all these OEMs, it's coming from all sides. While they could currently still get rid of some of their overflows at a acceptable margin for them, because they're used, as Larry shows very well, they're used to so much less margin than Tesla, and they made most of their margin actually on their financing business, which is difficult now with the current interest rate environment. It's coming from all sides. It's just I really wouldn't like to be a shareholder of any of these companies at the moment, and certainly not GM.
Yeah, and just one more comment, back to Larry's report. The way to know that this is very possible is there's a thing in the industries that called say do, which is like, what did you say you were going to, and what did you actually do? And if you go back and look at the predictions from 1 to 3 years ago from the major auto companies and where they were going to be in EV versus where they are today, I mean, they're nowhere close. And that lens, these are companies that invested in Nikola. These are companies that invested in Lordstown Motors. These are the CEO, the leadership team, and their board of directors approved these decisions. And this wasn't very long ago. And then you look at where they are with their own business. Right now, GM doesn't have a battery facility up producing batteries. And you have a media that's not even interested in knowing, like, well, when's that going to get fixed? And then you look at the cars that they announced for next year. All of their car lineups, they're all literally Celestiq over 300K, Cadillac Escalade over 130K, and even the Silverado. They scrapped the entry version that was touted just not even less than a year ago, and their first unit they're going to launch is a $108,000 version truck. So they're not serious about this right now, and they're not capable. It's both things. It's not like they could do it, but they're not serious about it. They actually can't, they don't physically know how to do it and garner the unit economics that would make it a successful business. So this is what leads me to believe that they're barreling towards this. If the EV adoption curve continues the way they're going to be forced to enter into a licensing agreement, as long as, and then the Tesla innovation machine, if it continues at the pace it is, if they really solve autonomy, these two forces of the EV adoption curve, Tesla's innovation machine, and really the rest of auto and their inability to execute in this space, those forces are going to collide and really accelerate what I would view as partnership and adoption and working with Tesla.
Okay, so I want to get to your table, Alexandra, where we're going to compare the health of many of these companies, and it's all going to come together, right? But before there, I want to just close up the licensing conversation we were just having. This might be a really dumb idea, but I had a Tesla community member share with me their theory that not only will Tesla license they take your concept even further, Larry. This person was saying that they are going to license the factory. They're going to be able to basically have companies, whether it could be the legacy auto, but it could be any company, license the creation of a factory, giving them blueprints, helping them build it. Would Tesla ever do that? And is this something that could save face for some of these legacy automakers?
You're still muted, Larry.
Anybody else mute me? Is that better?
Yeah.
Yeah, actually, that was in my proposal. I see every reason that Tesla will will license the design of the factories, will provide engineering support to build the factories. I think it's vital, actually, that they do that, because it's going to be very difficult for an OEM to manufacture using the Tesla methods unless the factories actually comply to some of the Tesla requirements. So I think that's very much a part of it. I see engineering services, I see design services, and who knows, maybe Tesla will even sell the machine that makes the machine. So I see that as a real opportunity. And I think it's a great opportunity. But, when you talk about, people criticize the board of Tesla, but I have to say, the General Motors board really, really needs to be fired in whole. And the CEO needs to go. That company has made some terrible, terrible decisions.
Nicola.
Anyway, it's just a personal.
Oh yeah, and Nikola is only one of them. And the Ultium battery was completely wrong as well. Those pouch batteries and whatever. But let me just add to that two things. I actually like the idea of selling factory outlets and whatever, because it will. Obviously, it will bring Tesla the whole licensing fees and whatever it comes with it, but it will also avoid any of these careful monopolistic situation call outs, because obviously if Tesla becomes too big in energy, too big in cars, too big in full self-driving, whatever, that could be one of the things slowing Tesla down. And by sharing, I think the risk just diminishes.
Yeah.
Before we move on, I have a quick question. So, how do you guys view this licensing thing? If Ford comes out and says that they have 150 suppliers, that parts need to talk to each other, it takes forever to make changes, how does it look? Are they going to Tesla to when they want to make a change? So are they licensing their engineers? Because aren't they trying to bring that in-house? And then doesn't everyone have to do that? Bring the whole software engineers internal and do everything on their own?
Well, of course they do, but to do that from scratch, I can tell you, to build a software business, to build a software function from scratch is an extraordinarily difficult thing to do. And to do it, when you're trying to manufacture a car, ask Volkswagen, they'll tell you just how difficult it is. They've had to scrap what they're doing. So the way to do it is to take an existing team's that's functioning and to have that team help you build a team, use that existing body of software and use that as a way to get started. It'll shorten the cycle time for Ford by, 3 years, 4 years. and it'll reduce the level of risk. Right now, the level of risk Ford faces is incomprehensible. I don't think the Ford management begins to understand the level of risk they're taking on by trying to do this thing on a greenfield basis. It's staggering to think of what they have to go through. It took Tesla 10 years. It's going to take them longer.
Yeah. And
it's crazy. It's crazy.
Volkswagen tried 14,000 software engineers, gave up, fired them all, rehired 5,000. Now they're at the point deciding that they are not a tech company, meaning that didn't work out either, right? So, and that's Volkswagen. And I think Volkswagen is probably more agile than Ford is. So,
no.
Well, not anymore, for sure.
Volkswagen is the ultimate disaster. I think Ford is probably in a lot better position than GM or Volkswagen, but they would be a whole lot better position if instead of hiring 5,000 people, they hired 50.
Yeah.
Instead of hiring just 50, they hired 50 and had Tesla bring 4 or 5 engineers with them. That team would do dramatically faster and better work than 5,000 or 1,500 engineers would do.
I've talked about this.
Go ahead.
Go ahead.
I'm sorry, Alexander. I've talked about this. This transition of like, hey, we're going to try to do this the Tesla way. This takes many, many years to build that up. Tesla, like Larry said, it's over 10 years. And that was starting from, a group of people that fit inside of a conference room. And then they organically expanded that. And they organically expanded that core with Elon's thinking, hiring all these people in kind of his mode, his culture, his way of thinking, to kind of like slap this group together and think you're going to bring all these components in-house. You're going to change over your entire supply base, and you're going to have people that can think in a vertically integrated manner, act in an efficient and vertically integrated manner, and just do this. It's going to take many product cycles to do this. This is why I believe that they're actually not going to meaningfully produce EVs over the next couple of years. Even this 2025 product, I'm sure they looked at the Tesla Investor Day, Jack, and said, wow, our 2025 product's DOA. It's probably a step in the right direction, but yeah, it's going to be nowhere near where Tesla is going to be in a couple of years. So what do? I think what they have to do in these situations, and I agree with Larry, they have to downsize so they get the group in kind of a meaningful size, not this large size. And then they have to go figure out what they're going to have the ability to make over time and do internally. And then they're going to have to swallow hard and go buy some things and work with a company like Tesla. I think that's probably the least path of resistance and their highest probability of success in doing that. And I think Tesla has shown that they're a player that's not focused on draining and making massive margins and hurting everybody. They want to just move the kind of the EV industry along, but I'm sure they're going to make money doing it. So just this transition that these companies have to do is massive. You can't just read a playbook and do it, and you have to have the right leadership to be able to do it. And then you've got this whole union structure behind it. So it's extremely complicated, and there's a very low probability of success. And the street doesn't seem to discount this appropriately. Again, they think they have these multiples in the single digits, and like, yeah. It's no. I think there's even much greater risk than where they're valued at today.
Larry, didn't you tell me that Morgan Stanley is suggesting a Ford license with Tesla? And then very likely they saw the video that I did with you where you're explaining all this. What was your reaction when you saw that?
Yeah, I mean, they really, just a week or so after our talk, they came out with this paper that, said that, Ford likely will license more than the NACS. But I want to pick up on the point that Jeff made, and Morgan Stanley missed this point. These 100-year-old firms, unlike the Chinese firms, are used to deterministic plans. This is the plan we're going to make, that on such and such a day you'll have this available and this will be completed and then that'll be completed. And they build these gigantic plans and they hire these people and they build these gigantic plans. And, that's how they've done it. It's not going to work. This deterministic approach to building, it's not going to work. The reason the Chinese are doing so well is because they've learned. Tesla is not inventing this new approach to, building software, building hardware, building cars. This has been a development over the last 30 years in the software industry, but it's leached into manufacturing, and the Chinese have learned it and learned it very well. It's the opposite, really, of the Toyota way. We're seeing the end of that whole era of deterministic planning and all of that stuff. We're into an age where agility is the focus, and it has to be, given the rate of evolution of the technology. And you can't have a union shop with union practices doing agile manufacturing. You just can't. It doesn't work, because unions want to define exactly what the job is, when the job will be done, how many hours, what the skill set is that person has to bring to that job. Doesn't work. In the modern world, everybody has every skill that they wish to evolve, and the skill that they bring to the table is what they're able to do, and they become more and more skilled in that, and they take that further, and they contribute to the evolution of the part or the component or the job or the software piece. And that's not really the union way.
So Larry, during this conversation, you've spoken negatively about Toyota, Volkswagen, GM, and you just explained this whole issue. Is there some company do you think the competition is coming, and which company could actually deliver something that helps move forward with EV?
Polestar. I mean, guys, they're already eating the lunch of the European OEMs and the American OEMs that are in China. They're going out of business. I mean, they're having a going out of business sale. So that's happening in China. Why is it not going to happen in Europe, and why is it not going to happen in the US?
I love that quote. They're having a going out of business sale.
I mean, they're going
Ford and
out
GM
of
are out.
in China. In China. They're going out of business now.
Yeah.
Same with the Europeans.
Volkswagen
just bought 5% of Xiaopeng. It's crazy. It's like I've been saying, it's a changing of the guards. Why would Volkswagen now let Xiaopeng, a very small startup, create electric vehicles in China and put the Volkswagen badge on the Xiaopeng car? It's like, whoa, that's a real, if they're willing to do that, then why wouldn't they be willing to partner eventually with Tesla?
It's a going out of business sale, guys. And either they are, if they want to learn how to do the business, the Chinese are not going to teach them. And the Chinese are not going to let them become competitors. Tesla would be more than happy to teach them, and would be more than happy for them to be competitors.
That's a good point.
Now, they tried to do a deal with Daimler many years ago. That failed. Maybe they weren't far enough along, or maybe Daimler didn't see the value that was in the product. And maybe Daimler wasn't prepared to wait around the 5 or 10 years that it was going to take. I don't know.
I think you made a very good point. This agility of the tech industry in America is actually unmatched in a lot of things. You find it in some of the tech industry in Israel. You find it in a couple of other pouches of the world, but you don't find it a lot. And the exact opposite is these sclerosed OEMs who I just had a leak from somebody very close to the Volkswagen board last week. So they kicked out these, and now they have this person in charge, and they're all happy. They're comfortably happy that there is now somebody not contrarian there anymore. They are stopping all active sales in China. They're happy about that. They are qualifying Tesla as a tech company so that they don't have to measure themselves with Tesla. For them, their biggest competitor is Stellantis. I mean, it's like as if they're going 25 years back, right? There's just no understanding and no agility. Sclerosed is really the word that comes to me all the time. And they want to stay in their good old comfort zone, which is shrinking. But yeah, they're all in the warm comfort zone together. It's sad to see and so easy to see.
Hey there, thank you for joining me. If you can, please consider supporting this channel so I can keep it going. It's a lot of work arranging all these amazing interviews. One of the easiest ways is just to click that join button and become a member of the channel. Thank you very much. Let's get brighter. All right, so let's talking about going out of business. Let's see who's actually surviving and who's got the good financials here. So Alexandra, if you follow her at Tesla Boomer Mama, she basically publishes this, I think once a day, don't you? Oh no, not this one. You do the ETFs once a day, but this one you keep track. And this is my understanding would be you're comparing all these major companies. Here's the top 8 companies in the market cap. And then you also down here, you've got all of the automakers, and you compare them based on their, I guess, ratings by Moody's and S&P in terms of their debt capability. Why don't you explain what we're seeing here?
Yeah, with pleasure. So I've been doing this now, I think this is number 6 every quarter. So I wait for the financials to be reported. Now, not all of them reported yet. NVIDIA is not reported yet, but I mean, it's just a matter of finding the perfect moment of doing a table again. There's never a perfect moment. So I just did it yesterday. So this is the financials of the second quarter. And my initial purpose of this 6 quarters ago was to show how ridiculous the ratings are compared to the financials. So even if you don't read the numbers, you should obviously see that there are certain criteria for credit worthiness, because a credit rating is about financial strength, right? How likely is it that these companies go bust, and how strong are they financially? So even if you don't read the numbers, you should quickly be able to see how good they are, because darker the green, better they are, or in what critical situation they are, because darker the orange, more is it critical. So I list first the 30 mega caps. So they change obviously because of, the stock market changes. So some move up, some move down, but this is the current 30 biggest companies for which ratings exist. So you will see there are a couple of companies actually missing, but that means they are not rated, because the whole purpose of this table was to compare how the rating agencies set them up. So those are the top 30. And then on the bottom, I added 10 OEMs. Why are they on the bottom? Because obviously they're not in the top 30 market cap. So I couldn't have had Toyota in the top list. And then I just took for the ones that had a rating and I had all the information for it. So I use 4 of the criteria that are crucial when you're doing credit ratings, which is cash to debt, debt to equity, debt to EBITDA, and debt to revenue, which is just, the typical numbers credit analysts use, and Wall Street analysts as well list them at this particular moment. So this was yesterday. And then also the Altman Z score, which I like a lot, but also do know there is a heavy component of the stock price in the Altman Z score. So you will have an NVIDIA with an extraordinary high 34 Altman Z score, and you have a Tesla with 14, which looks a little bit depressed now. It's an excellent Altman Z score because everything above 3 is positive. Between 2 and 3 Altman Z are the companies where you would wonder whether they're actually trending towards bankruptcy, and below 2, 1.8 to 2, depending on what industry, it gets really critical. So you see on the bottom part of the table, the Altman Z score, all of those are dark orange. So all the OEMs already have a very strong indicator for being in financial trouble. Then you have a couple of them like Stellantis. That's why I think actually Volkswagen tries to compare themselves to Stellantis, because Stellantis has a better financial situation than Volkswagen. At the moment where they all merged, they restructured their debt and everything, it allowed them to purge a certain healthier situation. It's not a perfect situation, but it's a healthier situation. So the mega trend is Tesla is, with Alphabet, the best creditworthiness mega cap there is in the world. Okay, it is the strongest financial company in the world because it has hardly any debt. So that's that. The second outcome is it is still severely underrated. Yes, they are both now barely investment grades with Moody's and S&P. Tesla is, but it should actually be double A, if not AAA level. So my crusade continues. In 7 weeks, S&P has its annual anniversary of these ratings. So you'll hear a lot from me again, drumming the drums, beating the drums, making sure they hear that we're watching them and that they don't want to be shamed again. So that was the whole reason why I published this week.
Thank you for shaming them.
I love it.
Thank you, Alexandra. I want to do a show just where I want to show everything that you've accomplished, because it's racking up. You have done 4 or 5 things now that you have set your mind to. You've made waves. You're being seen and heard by the top executive, the top government. Things are happening. So thank you for doing this. So yeah, as we saw there, that all the automakers are struggling. They are maybe going out of business, like we've been saying. Going out of business sale, right? Ooh, okay. What's next, guys? Do you want to talk about the stock market?
Well, just one thing on that. Just don't discount. I would just not discount the fact that there's a $9.2 billion loan going from the Department of Energy to Ford over some period of time. And then there was $2 billion, it's very quietly, $2 billion went to GM and Ultium to build. I mean, this is a lot of money. So this is basically a pre-bailout in many respects to allow them to help to transition to EV.
And I don't call this government. I don't call this government. This is our money, right? Whenever somebody tells me, oh, the Fed paid them that or the government paid them that. No. This is my taxes. I mean, and nobody asked me whether I wanted to do that, right? So here we go.
And that's not the first time.
2008 all over again.
Yeah, it's multiple loans, very good, rates and all that. So, yeah, I think Ford $9 billion to build 3 factories. So, yeah, it's like nobody has to pay for it. Okay, let's talk stock market. So, in general, what's happening? We saw Kathy Wood do a very long tweet thread. She was talking about how there's massive deflation happening in China. And this is something that's going to kind of spread against globally. If there's deflation in China, there's going to be deflation in the US. And yet here in the US, we're hearing the Fed continue to say that they're going to just maybe raise some more. Maybe they're going to pause some more. What's going to happen is, and some people are saying that deflation in China is actually good news for Tesla because their supply chain costs are going to go down significantly. Now, what do you guys think is happening?
Deflation is never good news, guys, ever, for anybody.
Why? Explain to me why. Tell me the logic of what's going on.
I guess you weren't around in 1930, but that's what deflation
Neither were you,
brings.
Larry.
No, but I lived with the consequences because I grew up in a household of parents who grew up in the, in the Depression, and it's an extraordinarily tough. It's far tougher to get out of a deflationary cycle than to get out of an inflationary cycle. Look what happened to Germany. Look what happened to Europe in the deflationary cycle of the 30s. Look what happened to the US. I mean, it's terrible, and it's not something. And it could be very, very serious in China. I sold my company in 2014, and in 2015 we had a conference, a summit conference, And for my speech, I spent most of the time talking about what was going on in the Chinese real estate market and predicting a disaster for China. Everybody, I saw them rolling their eyes. And I was, quite a few years early. But I could give that speech today with conviction because, the Chinese real estate bubble, they've put off the bursting of it for years, for a decade, but it's coming. And when it comes, it could bring the world to, it could do to the world what the stock market collapse did to the world in 1930 in the US. And on that happy note,
Yeah.
deflation is is awfully tough. It's far more serious than inflation.
But I do believe the Chinese government has the money printing machine it needs. I mean, don't you think so?
The problem is there's no printer I know that will print confidence. And when you lose confidence, when you lose confidence in a government and a system, it's extraordinarily difficult to rebuild that confidence. Ask anybody who was in Germany in the 30s.
Oh, no doubt.
I've seen what hyperinflation can do. I've seen what depression can do. Neither of them are easy to solve.
Mm-hmm. Yeah.
Okay.
And on that,
is there a chance that is there a chance that AI and robots could save the day, or is it too?
Well, I'm the wrong guy to ask because I regard the AI revolution as a little bit overblown or very overblown. I think that large language models are a huge, huge invention. They're incredible. They are going to bring incredible benefits, but I think we're going to have to go through the hype cycle with them. I think we're right at the very peak of the hype cycle, and we're about to go down into the valley of despair with large language models. I think we're overblowing their capability by quite a lot.
Oh wow!
Yeah.
So you're quite pessimistic on AI?
Yeah, he's a dichotomy, Larry. But yeah, I disagree with you, Larry. Big time disagree. But
Okay.
Maybe you're more boomer than me, Larry. Oh my God. Maybe
he's more boomer than you.
Boomer Haus. Oh, there we go. See how I do you those next
I've seen these
transitions.
I've seen these
Sure.
too many of these revolutions.
I know. We're getting old and depressed, right? Don't tell me about it.
So the next topic we can do, since Larry just depressed the hell out of me today, let's make it. Okay. I will not. Deflation is a big deal. I will keep watching on that. I'm just hopeful that it doesn't run away from us like we think. Okay, so let's talk about other topics. And one of the topics that people are just wanting to know more about is, what is the Boomer House? So Alexandra, Tesla Boomer Mama, set up this organization in X, formerly known as Twitter. And so basically you can get the premium badge, the yellow badge, if you're a corporation. And you can have affiliates. So in order to get the premium gold badge in X, you would pay $1,000 a month. And Alexandra just very graciously said, I'm going to take that on and pay that herself. But then she said, I'm willing to let most people or anybody join as an affiliate. You would pay $50 a month on top of the $8 a month that you'd pay. And the promise is that people who have this badge and who are affiliates of these organizations, they get double the impressions. So people just wanted to know the model. Why did you do this? Sure. I'm a member, but curious, just people are just trying to understand, how does that help with people who are on X, formerly known as Twitter? So
the first idea of this whole thing came just last Wednesday. I mean, it wasn't like, the big plan or whatsoever. It just popped up in my life. I had seen on the Tuesday a post exchange between Elon and CB Dodge, where CB Dodge said, since I have my affiliate badge, it's much easier on X. Love it. And Elon said, yeah, that's the way to go, verified organization. So I started looking into that. And the next morning I had, by pure coincidence, a discussion with Farzad, who said, I'm setting up my verified organization. And I said, can I hop on your train? If you're doing a verified organization, let's split the $1,000. Each of us pays 500, and then per affiliate, it's another $50 per month. And, it's cheaper than doing each of us one. And he said, no, I have my own plans. I want to go really big in media. And I respect that. And then the second thought we had, maybe we should do it just among us CyberBulls, but it felt like being too small a group for that. And my idea behind this is I felt the last couple of short weeks, there was, excuse my English, but there was a lot of crap posting on X, because once this ad revenue model was out there, people were just, engagement farming, asking stupid questions. Which ice cream do you prefer? I mean, the crap was really out there. We became the Facebook of another era. And I thought, how about teaching people that you can actually get engagement by giving knowledge, not only by giving crap. I mean, teaching is not the right word, but trying to become a group of people that help each other strive on X and maybe other platforms, if ever there is ad revenue sharing somewhere else, and make this affordable. So my initial thought was like, okay, let me stem the first 3 months. Let me just pay those $3,000 out of it and see whether it works, because it would obviously, or should obviously, increase my ad revenue as well. I'm not on X or I'm not on YouTube with you guys to make money. My subscriber money goes to charities. This one was a project where I was, willing to throw $3,000 away to see whether over 1 to 3 months this would work and bring something. But I don't want to also lose money on it. I mean, if I just get out of this whole story even and provide a service, that's good enough. Not that I'm not loving to be a money machine, but this is not my platform where I want to make the money. If I can make good ad revenue money, I'll be very happy about it. But that's not what this is all about. So last Wednesday, I had one of my subscriber spaces, like every week. Earl was there, a couple more people were there. And this idea, I brought it forward like I'm talking now, and everybody was like, oh, that's a great idea. Let's do that. So that evening, I set up an LLC. I got the fiscal number. I applied for a bank account number. I applied to become a verified organization by Twitter. And to my surprise, on the Thursday morning, 9:00, they'd reached out by email, by email and by DM, explaining to me what I had to do, which was not a lot other than paying the $1,000, and explaining to me this can't just be a scheme where I collect the $50. I pay the $50 per affiliate on top of the $1,000 to Twitter and cash in the $50. It has to have more of a purpose. So we're brainstorming with the first affiliates. The first one was Earl, but very quickly Herbert came on board as well. So we were brainstorming what else can we provide. So it now it is more of teaching how to be a good social media creator on X, and also those that want to sell merch will have a platform within the Boomer Haus to sell their merch, where we don't take any cut whatsoever, but they have to pay a higher tier, so that the mix of all that, first of all, covers really my costs, because with $50 my costs are not covered at all. There's a company to be run and accounts to be run and whatever, and on top of it, online payments, obviously, as you all know, take a huge cut out of these. So the way we're trying to structure it should be by the year end that the money coming in at least covers all costs. That is the goal. But what is really surprising is, so the 60, now we're 72, I think 72 people that are already affiliated to the Boomer Haus, they are seeing incredibly better numbers for impressions, for followers, for profile visits, for a lot of other things. Now, will this be sustainable? I don't know. That's why my experiment time for this whole thing is obviously 3 months. I want to see after a week, I want to see after a month, and I want to see after 3 months how sustainable this is and what happens. At the same time, obviously, what happens and what I think is great is other groups are forming. The Bradford Ferguson has now, I think, 7 or 8 affiliates to his Rebellionaire badge. The Tesla Owner Club of Silicon Valley, John, they set it up, and I think they're giving the badge to all their Tesla owners in the club. So this is making progress, and this is giving better visibility to all those that want to do that. And I think it's actually improving quality of the Twitter feed. Now, at the same time, sorry to be so long, but at the same time, Twitter changed their algorithm, and it seems to, have the same goals: less crap posting, more interaction, more quality. And so this all moves in the same direction. And I found the experience the last 2 days on X much better. So just to give you an idea, my average daily impressions were around 170,000. And yesterday I was at 500,000. I was a little bit more active, but it was not, I wasn't spending the day on it. So the result in terms of impression is clearly there. I gained a lot more followers, and so did lots of my affiliates. The other good thing is once you have the badge, you can change your profile picture, you can change your name without losing the blue check mark. But it does obviously come with a cost. The base cost is that you have to continue having your $8 subscription, and the badge per affiliate costs $50 to X, which equivalent to our starter package at $50.
But you have to be a boomer?
No,
You don't have to be a boomer.
No. It's just me and Larry who are the boomers.
And Larry, right?
So a couple of things I want to clarify because people don't understand. So Boomer House specifically is a verified organization with the yellow badge, and you're allowing people to be an affiliate. It is not a multi-level marketing. It's not trying to make money. There are some organizations that are trying to sell the affiliate badge to other people. That's not what this is. You just pay the $50 to X. X is going to make $40,000 a year now because of this model with just the 60 people that have joined the Boomer House. And so, I mean, this is another way to support X. If it translates to increase in impressions, and then now that you have pretty lucrative ad revenue sharing, it could actually pay for itself. So we'll see if this is what's happened for the smaller creators. If it increases them enough that it will pay for the $50 per month anyways, then it's good. So the whole point is quality. So thank you for doing that, Alexandra. Well done. We'll see what happens. It's a fun experiment, but it's not this nefarious thing that some people are like saying.
Crazy stuff out there. Yeah. But it is, I mean, you remember when the blue check mark first came out for everybody, how lots of people were screaming for a couple of days and then it dies down. They have something else to scream about. You can't do anything about that.
Okay. Well, thank you so much, Larry. You are amazing. I appreciate you joining us as bulls. You're definitely a CyberBull. You're a weird one, though. Very risky, very conservative for the first 2 years. And then all of a sudden, there's big, giant ideas.
Without AI. Without AI.
Without AI. It's like, I got to think. You're very smart. I appreciate your contribution
Come back,
today.
Larry. Come back.
It's been a lot of fun. I have to say that I really get a lot out of you guys. You do a great job. So it's a pleasure to be here.
Thank you.
Thank you. So you can follow Larry at Tesla Larry. I used to be called Tesla Herbert. At Tesla Larry. Okay. Thanks, everybody. Follow Jeff Lutz. He's at the Jeff Lutz. You can imagine, I keep telling people, reminding them that corporations pay him big dollars for 30 minutes of his time, and we get this brilliant information. Please follow him on Twitter at the Jeff Lutz. You've got Xander. He's been very busy with his yogurt shop. He's moved now to Austin. He's going to start making more of a presence here on CyberBulls and Twitter. He is somebody who's learning a lot about options trading. He's an all-in Tesla investor. Everybody knows Alexander Mertz, Tesla Boomer Mama. We're going to have to redo a survey because I got to say.
No. Really? I won.
You cheat. You did. You kind of.
No. I don't cheat.
60,000 followers vote for me. You know what to do. You can't say that.
Herbert, darling, you were on vacation. You don't know yet. 80,000 now. 80,000.
Yeah, we're going to lose a lot of popularity contests. I
don't know what these people want, but I seem to give it to them.
It's so painful, Alexandra, because at one point, you, me, and Farzad were all at exactly 8,000 followers each. We were looking at each other's numbers. We're at 8,000. Now you're at 80,000. And I'm like at 30. So it's like...
It doesn't matter. You're now in the Boomer House. Now we'll catch you fully out there.
Okay. Anyways, thank you, Larry. I'm sure you don't give a crap about followers. See you, everybody. Thanks all.
Take care. Bye bye.
See ya.